welcome to a special live extravaganza of Leading Change. I get the opportunity to bring you guys 12 of my favorite experts in the insurance industry with various levels of festive fare as we're going through our trends to watch for 2023. My name is Emma Roloff, and I have got Phillip here to help me with the co-hosting, and I'm going to have you do your introduction here in a second, but just a couple of housekeeping things for everybody. If you missed the announcements, Bradley and the team at Insuretech Insights have been wonderful enough to come forward with a pack of 3 tickets for their conference coming up in New York this year. So if you want to be in the running for that, throw a festive selfie into the chat. I put my little fancy earrings and bow into the chat to inspire everybody to get going. But come into the chat because that's how we're going to know that you're here and know that you were engaged with us. And we'll be choosing one winner to get that pack of 3 tickets for themselves and their team. The other little housekeeping item that I want to put out there for everybody is if you like what you're seeing today, make sure that you're following me on LinkedIn so you can stay up to date with the Leading Change series, as well as subscribing to YouTube. But send me a message if you want us to dive deeper into any of these ideas beyond our rapid fire trends today. And we'll use that as an opportunity for me to hang out with some of my friends again in the new year and have some more deeper dive discussions about all of this. So Phillip, as my co-host sitting there with me today, can you give everybody an introduction? And then we'll get going with your hello and then right into your trend as well, so we can start bringing in all of our other friends.
I love it. Thank you, Emma. So basically, my name is Phillip Morris. I'm the Vice President of Sales at a company called Eberl that nobody can ever pronounce. It's Eberl, E-V-E-R-L, but you call it however you want, so long as you call me. And so we like to pride ourselves on giving back and doing great things that promote, not only unison and unity across the industry, but be able to be the problem solvers and help our friends and our colleagues and our competitors out, even though we need to, and those different things. So this insurance trends of what's coming up in 2023, I think is very fitting. And so, like you said, Emma, we're going to have a lot of really cool things that we're going to be talking about here with all these awesome experts from across the pond and across the country and around the globe. No different than my kind of little topic here. I would love to win those tickets to New York, but I know we want those to go to the right people, and I can make my own way there. So my little 2-piece in there is really about a big trend I think that is going to be big in 2023 and beyond, but it's really customer-centric innovation. And so it's really talking about the demand for hyper-personalized and real-time service, and really thinking about the client and the policyholder or your customer, whoever your end user is, putting them really in front and thinking about them before you make any decisions. So that could be on the topics of adopting things in your realm, Emma, like adopting artificial intelligence, machine learning, digital platforms, but it really takes into consideration of looking at the different risks that our industry is going to face, whether that's climate risk, reinforcing, ESG-led strategies, looking at proactive risk management, looking at different ways that we can come at the industry and tackle the biggest problems, but starting with the voice of our customer and what the insights and what everything that's going to come from that design thinking, that design approach of constantly be continuously improving on getting the proper information for where we are right now, but where we're going into 2023 and where we're going beyond that. And so I think we're going to hear a lot of pieces that may delve and touch on these things, but I really think that focusing on distinct personal customer types and really starting to really dig into who our customer is. It's not just the person buying the thing, but really unlocking different mechanisms for growth and innovation across, regardless of what our function is in the industry. And you're still muted, Emma.
Every dang time. All right. Thank you for sharing that to get us started, Phillip. I think we are going to see bits and pieces of that idea come out, which is why we wanted to kind of start the conversation there. I am so excited to see that the chat is blowing up. And I think what we're going to have to do, because I haven't seen any actual selfies, we might have a shy crowd. So Frank inspired me because he's got his beard and he put the Santa emoji in. If you want to be entered, you don't have to put a selfie, but put something festive. I've seen lots of emojis. If you're putting festive emojis into the, ooh, look at that. If you're putting festive emojis into the chat, we'll include you in that drawing. So keep them coming and keep telling us where you're joining from. I love to see it. And I think I lost the comment. Here it is. Keely, I am so sorry that it is -18 where you are right now. And I will stop complaining about my life here in Wisconsin, where we are still above 0. So with that, we're going to take our pause here and start bringing on some of our other guests. So up first, we've got Margo, who's going to be joining us, and I'm going to bring her into the stream. Welcome, Margo. So can you get us started by giving everybody a real quick introduction of who you are?
Sure. My name is Margo Giles. I am the CEO of Go Giles Consultants. But more importantly, I'm a former agent. I'm an agency owner. I work in private equity now. And most recently now the CEO of Insuretechs, which is our new management platform that's just launching in Q1 here in 2023. And it's really centered for insurance distribution and focuses really heavily on customer-centric relationship building and really advanced AI power. So that's where I'm coming from. I'm coming from that background here, and I'm excited to talk about my trend.
Great. And look I didn't mute myself again. How exciting.
There you go. Good job. Well, I'm sure I'll do it at some point, so we'll be even.
Love it. So Margo, take us right into it. What's your trend, and, kind of introduce it to us and tell us what it's all about.
Yeah, I'm coming in hot, guys. Okay. It might be cold where you are, but I'm in Florida. So we're coming in hot today with a little bit of a controversial topic. So my trend is I'm seeing a direct-to-consumer bubble burst in 2023. And I have a couple of reasons why. And then we're going to talk about what I think these companies can do to avoid that. But, we've got, overinflated valuations on some Insuretechs that came into the market in the last couple of years. We've got the drive of VC money. We've got some underperforming P&Ls. And so all of this is kind of primed for a little bit of a bubble burst, in my opinion. One of the reasons why I think is that D2C is kind of treating themselves a little bit like a commodity, which is a no-win proposition. And coming from an agent point of view, we know that insurance really lies in the protection and the relationship and the customer-centric relationship that we have in insurance rather than the product itself. And they're highly customizable. They're tailored to be specific, which is really the opposite of what a commodity is. So we've got D2Cs that have kind of lured themselves into this false sense of security by starting with insurance products that maybe more look like commodities. These kind of we call low-hanging fruit, really easily embeddable products, but they're going to have a problem going up market. I think that really hits home when you start to get into commercial and large commercial, anything with premiums over 10 grand. I think they're going to be ill prepared for that without embracing the independent agent channel. Second would be pricing. So sort of a race to the bottom. If the insurance is transactional and you're commoditizing it, then really what you're winning on is pricing. And so we're taking savvy consumers that used to purchase on advisor-based and trusted advisor and risk advisor-based, and we're teaching them and we're training them to treat insurance like a commodity, which could be dangerous because now we're racing to just price. And any tenured agents will tell you, you try to get rid of those price-only client books within the first 5 years, usually, of being an agent. Third, I think technology is here. We have advances in data modeling, AI, and as predictive modeling gets better, pricing is going to become more homogenized. So if price is all that you're winning on with D2C at the moment, then what do you do when AI has solved this pricing battle between all the rest of them? And then really, I think what it comes down to, if we're looking at this in the ecosystem, failing to understand the needs of the consumer is sort of product 101. Are we really solving a pain point for the end consumer by offering them this insurance, these bite-sized insurance pieces, within a larger scale? And if you're looking at even a small business owner who could have 6, 7, 8 different policies for, across multiple carriers for multiple, verticals, if each one is at their own direct to consumer, are we placing the burden of being a risk advisor and of being a manager of that portfolio back on the consumer? And is that really what they're looking for? And I think we're seeing some trends that may not be what they need to do. So I'm going to pause there and get reactions. I'm sure that it's hot in the chat right now.
Yeah. So
I'm not looking at.
the chat is going insane. And
Yeah.
I'm also a little frustrated with all of you warm weather people for throwing it in all of our faces, because there's a lot of that going on. And I thought we were all friends here, but clearly that's just not the case.
All right.
So we do have a couple of chats, Margo, that I want you to go specifically and respond to. But in the nature of making sure that we get everybody's trend thrown in, I think we're actually going to change hats here and do some shifting.
Okay.
And thank you for joining us for our rapid fire trend analysis here.
Yes.
And then we will continue the conversation about all of these chats or all of these trends in the chat.
In the chat.
5 times fast.
Will do.
Thank you so much for joining us, Margo.
No problem.
We are going to bring on Rob. Hello, Rob. How are you?
Hey, Emma. Hey, Phillip. It's great to be with you here today.
Oh, you've got a hoodie. Your festive gear is a hoodie today. All right.
I have to say, I don't have an ugly Christmas sweater, so I had to go with the Hoth Star Wars. You get the AT-AT and all that.
I love it.
It's festive. We got it. All right. So, Rob, can you give everybody a quick introduction and share who you are?
Sure thing. My name is Rob Galbraith. I'm the founder and CEO of a company called Forest View Insights. I previously spent over 25 years in insurance on the carrier side, primarily in underwriting and leading innovation teams. I would love for folks to check out my free newsletter that comes out twice weekly at seetheforestview.com. And I'm happy to do any consulting or training sessions for folks that might be interested in the topic of how do you innovate from within a traditional insurance firm, or how do you partner with a startup community.
Awesome. So let's talk about that, Rob. So tell us your trend here, and I really like some of the underlying tones here. So I'm very excited to hear what you're going to throw out there regarding these Insuretechs and what's coming.
Well, I hate to be the Grinch, guys, but it is put up or shut up time for Insuretech in 2023. And I think we've already seen a lot of that in 2022. Quite honestly, much of this has come from the macroeconomic environment, right? Inflation, the rise in interest rates, the focus from growth to profitability. We've seen, unfortunately, a lot of layoffs this year. We've seen some failures. And so I think it really is time. And this echoes a bit what Margo was saying, but we really want a value to be demonstrated. We're not going to go on the promise of tomorrow. It's really are you delivering for the customer? And I would also echo Margo in terms of the direct to consumer. I definitely think there's a place for that. We've seen a lot of specialty MGAs and others, but there's been a lot more focus in the last year or two on the agent broker community and enabling that, and recognizing that the insurance purchase isn't like other consumer goods. This isn't like a streaming service or a car sharing ride to the airport. It's a confusing purchase. It's something people don't want to get, but they know they need to get. They want their hand held. They want help along the way. They want to make sure that they're protected. When you have a claim, if it's not covered, it's not like you could say, oh, I'll exchange this policy for one that does cover my claim, right? Insurance doesn't work that way. And so I think that's where just the agent or broker community, right, have demonstrated their value. They maybe have not always done a good job of articulating their value or sharing their value, but I think more and more as startups have come in, they've recognized the value that the agent broker community does. And then really, focusing on three things. I think there was a lot of focus on increased revenue in the past and trying to grow products. But I think what we're seeing more is now increased efficiencies with artificial intelligence, automation, and others, streamlining back office. There's a lot of costs involved in insurance. We can reduce some of those costs, those frictions. It helps both reduce costs and improve the customer experience. That's kind of a win-win. And then certainly in the claims area as well, right? I think a lot of fraud detection software was out there early on, but now we're just seeing a lot more enabling a digital customer experience, taking a photo of your damage and sending it in and getting your claims resolved very, very quickly. And it's really complicated. There's a lot of stuff going out there. So I think really, if you're bringing new and emerging technologies to the insurance marketplace in 2023, you've just got to be able to demonstrate that value right away for companies so that, we are getting, we're seeing value from day one, not the promise of what could be.
That's right. Well, I love it.
So a couple of things. Rob, thank you. Number one. Number two, our Santa, Bradley Collins, has arrived in the chat. So everybody, make sure you say thank you to him for bringing forward those tickets for Insuretech Insights for us. So keep blowing up the chat there. And then I have also realized I called you all shy. It has nothing to do with shyness. The selfies are not coming through because of the LinkedIn interface. When you're watching the event, you can't add a photo. So anybody who has a photo that wants to share it, post it and tag us in that post. And we would love to see that selfie. But if you want to be entered in for winning those tickets that nice little Santa Bradley brought forward for us, put some festive emojis into the chat. I will be combing through those, pulling everybody's names together and grabbing a winner from there. So I had to do that little bit of housekeeping to make sure nobody felt sad like they were being left out of our festivities. But Rob, thank you so much for joining us. And to keep the pace moving, like I said, this is rapid fire. Keep the comments coming, questions that you've got for Rob on the idea. We'll make sure that we're interacting with you there. But thank you so much for joining us, Rob. And we are going to bring on Rory. Okay. Hello, Rory. How are you? You promised me antlers, and I see no antlers.
I see antlers. They're there.
they blurred out on you.
I'm too tall. I'm too tall for the virtual background. Sorry, but they even flash. They even have lights.
Fun fact for anybody who doesn't know Rory, he used to play basketball at the collegiate level, even though he's got a British accent here in the States. So when he says he's tall, I was shocked when I met him in person. He is in fact that tall. So Rory, can you give everybody a real quick introduction before we get to your trend?
Hi, everybody. I'm Rory Yates. I run strategy for EIS.
Oh, you were so quick. I was excited.
Oh yeah, look, I'm not the interesting thing about this conversation, right? The trends are. Let's stick with the trends.
Well, I like it. It's rapid fire, like Emma said. Go ahead, Rory, take it away. Give us that trend.
I think I've got another sort of catch-all, really. I sort of referenced when Emma asked me to do this a bunch of things. I've always thought about the big business drivers in insurance for this year as being embedded, risk-removing, adaptive, carbon neutral, and human-centric. So I bundle kind of things like AI and automation into human centricity. And but I think what I'm hearing as well when I'm listening to everybody coming on this call is we're in this sort of golden era of technology-driven transformation in insurance, and there is why this call actually feels so appealing, because we're being acted on by all these technology trends, and it's a really, in the 26 years I've been involved in insurance, this is a tipping point moment for sure, and it's hard to pinpoint those tipping points, but I think we are in one, and I think the thing that's going to define us going forward is how adaptive the insurers are. I think it is the defining moment for the Insuretechs next year, as our last guest suggested. But I also think it's a pretty defining moment for insurance businesses as well. They've got to start being truly adaptive and responding to all these new customer needs using all these great technologies available to them. So I guess my catch-all trend for next year is that adaptivity will define the competitive forces of the industry over 2023.
So when you see and you look at these technologies, do you think that there's going to be an opportunity for the insurers to make impact, or just kind of, as Rob said, it's time to put up or shut up? Will they show up?
It really is time to put up and shut up. Phillip, you're absolutely right. I think that is exactly it. I think they've got to be adaptive now. The price pressures are too high. Can't even respond to the broker channels. The customers being missed out. All of the stuff you mentioned around, I love that CX point that you raised earlier, and innovating in that the mindset of a deep human insight. And I think this is where Emma talks to me quite a lot about the fact that this transformation really is about technology meets people. And it's truly adaptive organizations. It's an enterprise design challenge. And yeah, we're there, right? The competitive forces suggest we're there. Life insurance in any other industry would be in structural decline by now. People would be exiting just because those businesses don't look viable anymore. It's time to change, and insurers, this is the year for it. I think adaptivity is going to change everything.
And you're muted again, Emma. Strike two.
At some point, I'll figure out this whole hosting live events thing. I was going to say, you've said it, Rory, and my trend, had we not been going quite through this rapid fire, would have been just that idea of finding the balance between people and technology. That's a conversation that pretty much every conference that I was at this last year was had in some capacity, whether it was up on stage or in conversations at people's booths and the like. That is something that we're going to continue to see more and more of as we head into 2023. So with that, though, Rory, your time has come to an end. And next up, we are going to bring Santa Dan into the stream. So thank you very much, Rory, and welcome to the world, Santa Dan.
Hey, I'm just happy to be here. What can I say?
I would expect
All right,
nothing less.
With that, go ahead and give your introduction to everybody.
Do I need an introduction? Let's be honest. Name's Dan Price. I am the managing principal founder of Keystone Experts Engineers. We are a forensic engineering and expert providing firm based out of Colorado. We're national, and we can do pretty much everything from engineers to building consultants to fire investigations to you name it. We like to problem solve. We like to get creative. So that's us.
I love it. I love it. So Dan, your trend I like a lot. Tell me about this introduction of, or maybe even a reintroduction of, evaluating the role of experienced talent.
Well, I think it all stems from this, as we all know. Bottom line is the industry is getting less and less experienced, plain and simple. But it's requiring more and more and more expertise. It's requiring better and better service, higher customer service ratings, better customer experience. All those things are extremely important today. But yet we're supposed to deliver all of that in the midst of, an exodus from our industry of just people that are aging out, retiring, or moving on to other industries. So the question that I've had to answer myself, and a lot of the things that we do, is how do we do more with less people? How do we get the right experienced people to touch more aspects of the claim process, in our case, more aspects of the assignment process? And it's not about trying to shove more people through and learn the entire process. It's really about, in my opinion, it's about breaking down the process. Instead of driving 4 and 5 and 6 major milestones, drive all 30 micro milestones, and then figure out where everybody else can actually fit into that process and what people need to learn. It's really easy to teach people 1 to 2 parts of a process instead of trying to teach them 30 parts of the process. And that's really where it gets creative. So if you've got, during normal cyclical daily times, one person can manage the entire 30 steps of the process. They can do this, run the claim, adjust the claim, deal with the contractor, handle the scheduling, all the other things. Well, during a CAT, during a major event, or when you're just out of talent, you need to take that 30-step process, break it down, and say, hey, all right, now they just need to be a part of every 5 steps of this process to ensure the QA, the QC, use better automations. Now, the complicated part of this whole thing is it requires a lot more planning and a lot more process management across the board, because believe it or not, it's actually going to take more time to handle a claim because you're going to have an assembly line effect with more people. There's going to be slight duplication over each thing. But the difference is the quality assurance and the quality control throughout the whole entire process is going to be managed and handled and broken down by the people that know it the best to ensure that it's never moving on the wrong foundation, on the wrong footing, with the wrong basis, or whatever you want to call it. So I will leave it at that for now, but that's where I'm at. And I can't really focus either when people are saying they can't focus and take me seriously.
I was gonna say, you might have costumed a little too close to the sun here for anybody to take you seriously. So we did have a question that kind of is perfect lead up to what you were just talking about. So obviously you mentioned at the front end, we're in an industry that is in a talent shortage and struggling to find good people. So, whether it's finding those good people or looking at how we're upskilling and investing in our candidates, what does that look like from your side of the house?
Really, what's the onboarding process look like, and how are we breaking it down? What are we really trying to bring people into first? You can burn somebody out real quick if you overwhelm them with the whole entire process. So when I look at things, we break it down to what are the easiest things to peel off and hire, and I could get somebody to immediately start making an impact and doing this tomorrow, or 2 days with just a couple days of training and onboarding with the right QA, QC over the top of it. So I start there. I break it down and I look at the whole entire thing and say, what can I peel off right now with somebody who's never touched our industry, period. And that's what I start with. And then I say, okay, let's cross-train them into this. They get that down. We can cross-train them into this, and we can widen, their breadth of experience. And then next thing you know, they really can manage the whole entire 30 steps of the process. But you've got to break it down, and you've got to see what the simplest, most replaceable aspects of the process are. And that's where you stick your first people, and that's what their entry is into it. And those people, if they're trained right, and if they're brought on right and onboarded correctly, they can become your next your next experts, your next best people in the claims industry, period. So.
Well, the audience agrees. Good job, Santa Dan. Thank you for entertaining all of us with your outfit. And thank you for joining us. And so next we're going to bring on Lisa, and you can take a photo, share that, and let the whole world enjoy that get up as well. But thanks.
I don't know. I try to stay out of the cloud.
Fine. Oh, I removed. There we go. We want to take you out of there. Santa Dan, why do I keep doing that?
The camera loves him.
Now, guys, I really got to get some lessons on how to run a live event here. This is getting
Santa doesn't leave till the 25th, Emma. I do have a bone to pick with you. I think I should not have had to follow Santa Dan.
I didn't know that was going to be the whole getup. Don't yell at me, yell at him. Well, Lisa is actually the one that's
got tacky suspenders. I can't compete with Santa Dan.
Everybody should take a moment to thank Lisa for being the catalyst, along with Jeff, who we'll bring on later, of this event. I was on a call with the two of them, and I said, you know what? Let's get crazy. Let's bring it forward. So, Lisa, thank you for inspiring all of this craziness. And can you give everybody an introduction to get us started?
Sure. And I would say you were the catalyst. We just nudged, Emma. No, hi, Lisa Wardlaw, coming to you live from Atlanta today in my, as tacky as I can get, trying to do video calls as well as do this. But I've been in and around insurance for 27 years, and I currently am the founder of 360 Digital Immersion, which what that really means is I help bridge between insurance and Insuretech, all things strategy, go-to-market channel, and product market fit. So nice to be here today.
Awesome. So it sounds like you get your hands and your feet and your toes dipped in lots of different directions there. So I'm very
Emma, can you hear me?
Yep, we're good.
Yep,
You're good.
Here. I'm very interested in your trend here because I think it's something that is sometimes outside of a lot of us, but it really affects all of us in insurance.
Yeah. So here we go, right?
Yes.
Dynamic underwriting. I mean, Chat GPT would not have predicted that I would talk about this, and I'm certain everyone's going to go try. If you can get Chat GPT to recite what I'm saying, please send it to me. I'll find a way to send you. I can't level up to Bradley, but anyway. Okay, so here's the thing, right? Insurance, by definition, was created on static processing. We've always monitored risk, but our industry and all the processes that we've done, from our systems to policy administration, to claims, to underwriting, have all been static, meaning point in time. And as technology, from data to risk monitoring, et cetera, has become more real time, and dare I say streaming, right? The world needs to switch. We as insurance, this is my big prediction for 2023, we will see more and more dynamic capabilities, and underwriting, drum roll, will be the first to usher this in. Yay! I'm so excited. High level though, what I want to talk about is we will see risk move from point in time to continual, so streaming, so iterative, real-time underwriting, and another drum roll, we will see claims become more a point in time along the risk continuum, which it has always been. But because we were traditionally static, we had this very separate thing. Okay, so we will see things like embedded, part of this dynamic underwriting tradition. So less check the box embedded products and more intuitive, kind of in the moment of risk streaming embedded products. So I call it embedded uptake. And I think somebody else was talking about business models and customer, I think Margo was. And I think we will see this concept of B2B and B2C start to morph, hybrid. We'll start to blur the lines. What does it mean to sell B2B with a customer actually uptake? We're going to see more people on social, and more people, Dr. Robin Chiara would advocate for this, more people trying to get generic uptake on things like TikTok. So how do we get these embedded services to be demanded, or my favorite word is consumer want? That's my prediction.
Well, I like that prediction, Lisa. I said, so what is standing in the way of this becoming a reality, like right now?
Right now, it's the static. So it's this like static cling, Phillip. It's the fact that our everybody thinks like we're slow to adopt and insurers are this or insurers are that. It's that we've got parts and pieces that were designed to be static. And so what stands in the way is we have to reinvent and rethink how dynamic works. And it's not just an engine or a technology solution. It's not just a new business model. It's all of it at once. And so this is why I predict that the underwriters, who are the gatekeepers of risk, have always been risk oriented, will usher this in. So I'm super excited about seeing that come to fruition. And clearly I work and advise a lot of people that are trying to make this happen.
So Lisa, we do see some other questions coming into the chat that I want to drive your direction so that you can keep the conversation going. But again, we got a schedule. We're staying on. We've got our next guest to bring on, and let's see if I can do it without, so far I'm not muted. Let's see if I can do it without messing up the cameras. Thank you so much for joining us, Lisa, and go join that chat and we'll see you soon.
See you later. Thanks.
All right, so now we've got another Santa, Awais, to join us today.
Two Santas. I can't undo.
Santa's got a collar.
Yep.
This is the business Santa. That's how you know we're going to get stuff done.
That's it. I can't really outdo Santa Dan, but I'm trying.
That's all right.
And this outfit is thanks to Emma. I had posed the challenge and she did it really well.
So Awais, can you tell everybody who you are and give a quick introduction?
Hi, everyone. My name is Awais Farooq. I am the Senior Vice President of Strategy and Transformation for Crawford & Company. Crawford & Company is the leading loss adjusting TPA services and technology company serving insurance industry for the past 80 years.
Awesome. All right. So take us right into that trend, Awais. We're going to talk about the idea of keeping insurance simple.
Yeah, I think, none of us woke up and said we want to go into insurance, or some of us did. I certainly wasn't one of those people. I love technology. I love process. I love insurance claims. But I think it has become more and more complex as we're trying to simplify things. So my prediction is that in 2023, we are going to become more, we're going to simplify the way we operate and the way we handle claims and the way we underwrite. I think part of what has been a challenge for our industry is we have deployed a lot of technology to solve a lot of different problems. And now it's a chance for us to strategize and understand what is it that the customer wants, whether it's, text messaging or communication and or predicting risk analytics or anything like that. How do we take the existing information that we have and optimize the way we operate? So I think it's going back to the basics of what is it that the customer wants and how can we help simplify that?
Okay. So in that process there, we kind of look at some of those things where some people would say that insurance is complex by design. We want it that way. But it sounds like you're looking at a lens of simplifying these things there. So how do you think that the industry's complexity impacts the policyholders, and what are those outcomes kind of look like, as we go for this simplification process?
Yeah, I think it's a lot of work is being done, right? I think to all the other guests that came on, they talked about a lot of the different technology and the different trends that are coming along. But I think where there's a miss, I'll give you a personal example. I recently had a claim and I had 5 different adjusters assigned to my claim, and which is a fantastic opportunity. But however, none of them knew what the other people were doing. So I think it's taking that complexity of variety of different specialized individuals and centralizing it in a way where you can have a streamlined process, where you can have simplification of the way you are handled as a customer, and you understand what the customer wants before they want it. So going back to that Amazon prediction of, you had a loss, what is it for you to come next?
Outstanding.
Thank you so much, Awais, for joining us. I like Business Santa just as much as I like Santa Dan. And I'm going to take you off and bring our next guest, Sabine, on. But thank you again for joining us. And you did have some fans of your Santa outfit as well.
All right, happy holidays.
Bye. All right. Welcome to the live stream and the rapid fire trending, Sabine. Great to have you here with us.
Hi. Hi, Emma. Hi, Phillip. Lovely
Hello.
to see you both and everybody online.
Yeah. So can you give everybody a quick introduction of who you are and why you're here, and then we'll get going into your trend?
So, yes, I am Sabine VanderLinden. I run Alchemy Crew, which is a venture lab, which work with insurance companies to deliver R&D and commercialization labs, which means that we always look at the future and seeing how insurance technology, but also technology as a whole, can enable the transformation of the industry, not only for efficiency savings, which is a big topic, I know, for 2023, but also to build new products and services and game-changing business models.
All right. So in your trend here, and I'm a big fan, Sabine, just so you know, I'm a little giddy on the inside right now. You're going to talk about and tell us about your trend.
Sabine and I, Phillip. So that's real fangirling right there.
That is. I'm
pleased.
very excited that Sabine's going to talk about sustainability in her trend.
Absolutely. So, I mean, before going into the trend itself, which is for me commercial sustainability, we touch upon really understanding how 2023 and the years beyond 2023 can help us be a bit more purposeful, what we've seen over the past year. And for me, I started looking at this trend since November 2019. What we see is we are going through a transition. Right? Some of us have heard around the world transition risk, the transition economy. We are looking today, after trying to ban alcohol products, probably seen that supply chain risk is a big problem as well. And then that leads us into the way we live in society, urban risk, and the big one we talk about all the time right now, climate risk. But I thought I would just start with a few numbers to echo what Rob said earlier. So when you look at Insuretech, in 2023, Insuretech is going to go down in terms of volume of investment. Based on my numbers, we will be probably at $8 billion invested dollars in Insuretech in 2022, which is, I would say, more than 40% down 2021, which was at $17 billion investment dollars. And so what we are seeing is there's question mark, right, into where Insuretech is going and whether it's delivering the value that investors are looking for. But now when you look at Insuretech within the context of fintech, well, fintech is going to go down as well. We estimate investment in fintech startups, which Insuretech represent 10%. That is going to be around $100 billion USD dollars compared to last year, which was at around $150 billion. But have a guess. The area which is going to increase the most will be sustainability tech. And those guys are receive quite a lot of money from investors who have realized it is a safe bet to go and find ventures which are focusing on the areas I mentioned earlier. And for us in insurance to be able to deliver on a sustainable world, and I call it commercial sustainability because I'm super interested in commercial lines, actually. That is where I'm going to focus my attention. That links back to some of the discussion already had before, meaning we will need to move away from static to more dynamic underwriting. So we need to take all this geospatial data we have out there and we need to make sense of it. And that requires for us to change the way we underwrite product and services and how we predict and prevent the risk of the future. That also entails, as we talked about, business model, that we move away from the traditional business models to look at much more circular economy business models or as a service business models, which take us into monetization. And also, lastly, digital ecosystem, which a lot of people know have been one of my big topics already in 2022. That means digital transformation is still there to stay for sure. And because we have a younger customer, which is far more digitally friendly, we need to make sure that we start today to answer the needs that they are going to bring forward to us. And to touch upon a point I think that Rob made, and also earlier, I think Lisa made as well, we are now moving into remote working space. We are fully digitized. We are moving into an hybrid environment. And the younger people who are going into working for us or who are being trained to enter industry are demanding that we have businesses which are led with purpose, again, linked to sustainability. So a lot of items I've mentioned here to cover what sustainability may mean for commercial line insurers next year, but hopefully at some point here that some of our viewers will hopefully dive into next year.
Yes, indeed.
Well, thank you so much for joining us. We're going to go from one heavy hitter to another, and we're going to bring on Bryan Falchuk. But before we do that, thank you so much for being here, Sabine, and keep the conversation going in the comments. I saw a number of things popping through as well. And as I said already, Rory is ready to have another discussion with you about this, Sabine. It's one of his favorite topics. But thank you so much and happy holidays. And here comes Bryan.
Hey, everybody. Emma, I have to say your heavy hitter comment. I'm wearing my wife's sweatshirt because this is the best I could do with the ugly sweater. So I feel really heavy and giant right now. She warned me not to bust it open. So
oh my God.
Thank you for making me more self-conscious about that.
No problem. That's what friends are for, right?
That's
and
right,
also tell your wife I like your Charlie Brown sweater because I saw the selfie go out.
Yes.
So can you give everybody a real quick introduction of who you are if they don't already know?
Of course, yeah. So I'm Bryan Falchuk, and notice the green lights on this are keying off my green screen. I don't have holes in my body. Other than that, I am a PNC person. I've been around the space for just about 25 years. Carriers, consulting. I was a chief claims officer. I was an advisor to the industry for the past few years, putting out a book series called The Future of Insurance and helping lots of folks kind of deal with all the change that we face. And I just joined and I'm about to take the helm at the PLRB that a lot of folks, especially in the claims space will know. Thank you, those who say you love my sweater. I will tell my wife that. Yeah, PLRB is really aiming to help the claims professionals in the industry more broadly with the complexities of coverage that we all face so we can make better decisions faster to support our insureds. And, you know, keep doing like that's the promise of the industry. So helping to deliver on that.
It's a good thing that Phillip isn't with you on your green screen or his whole body would disappear.
Just a floating head. Yeah. Maybe if I turn I don't know, it's even worse, but I got to talk to my doctor about this.
Yeah. Get your checkup, Bryan. Get your checkup.
That's right.
As Emma said, this is rapid fire. Let's dive right into it. Tell us about your trend and tell us where we're going.
So I'm cheating because I'm not sure that this is going to happen in 2023, but I think the seeds of it will. And for some carriers, they may get further along. But look, we've spent the past few years deploying all of these different point solutions for digitization where we had to because of the pandemic. And of course, some folks have done this more strategically, more broadly, but really broadly across the industry, we've seen much more deployment of digital solutions across the piece: underwriting, claims, customer service, acquisition, broker interactions, agents, etc. So the question is, with all of that digitization, what information have you had in the past? And information, I mean like useful stuff that feeds into your decision-making, but it was manual. It was in someone's head. It was in notes in a file somewhere. It was a PDF or a scan or an email. What information is now data? So because you're doing things digitally, that stuff that was sort of trapped somewhere in your systems is now actionable, is now specific, is now data that could flow into other points of your process. And I think what that enables is, as we start to piece it together, can we do broader decisioning with all of these different signals from lots of different places across our business? Can we make better underwriting decisions when we've seen the behaviors within a claim, or vice versa? You know, do we make different choices about customer service and how we proactively support people when we've learned totally nuanced things about how they want to interact, what drives them to be more upset or more happy? You know, take your pick, but we've got all of these kind of disparate digital points of data being collected. I think 2023 is a really interesting opportunity for carriers and of course some solution providers to say, what if we gathered this up, this seemingly disparate data, and tried to make better decisions in different areas of our business because of that? I think it's really brilliant. I think there's a massive unlock. I've seen some folks who are playing around with this, and it's wild, the kinds of things that that can come of it. I might get into some of that in my next book. Hint, hint, working on it right now. But I think it's really interesting. And I think the enablement of that is here now. And that's why I would love to see this be 2023, but that could be me being more optimistic and maybe like trying to push. But I think we can start to play around, and that's fascinating.
I love it. I love it. It's so instead of that, Bryan, what role do you think that software providers play in this integration versus the carrier themselves?
So I don't think this is a go it alone moment at all. I don't think a solution provider or software provider, and I know some who have the kinds of tools that could do this, they can't do it alone because it takes the carrier's data and it takes figuring out what is the signal, where is it, and how do we start to piece it together, and for what ends. Like, what is the carrier trying to affect? And some of that may need some testing and proofs of value to see, well, what could we improve? What decision-making or understanding could we improve? What very manual things are we doing today? What questions are we asking the insureds that we don't need to because we understand them better? Can we get off credit scores because we have a much clearer picture of their actual behaviors, not some model that has known biases in it like credit does? That has to be collaborative. And by the same token, I don't think a carrier can do this on their own for the same reason I've said this about a lot of decisioning tools. Even if you're the largest carrier in the world, you still don't have as much data, as much signal, as much pieces of the puzzle as the industry as a whole. And fraud's a great kind of use case to understand that. You can see all the fraud in your book, but what you can't see is what fraudsters who are more professional than, some random person off the street trying to get an extra $500, what patterns are they following? What intelligence do they have about, not committing fraud with more than once with a given carrier in some period of time so that carrier could never catch it? The only way you pick up on those sort of fraud rings who are smarter than we give them credit for and know, I'm not going to have more than one claim with carrier X in 18 months or they'll sniff it out, but I'm going to have 17 with these 17 different carriers. The only way you catch that is if you see everything. And so I do think it has to be collaborative. And that's a good thing because that makes us all better. And the impacts still get to be very specific. So the whole secret sauce, and I don't want to help my competitors, I don't think we have that problem because the net effect of it has to be very point specific to that particular carrier. We can just save on the intelligence building, if you will, or the model building.
Excellent. Strike three, Emma.
Someday I'll learn not to mute myself, but I don't want to distract while Bryan's talking, sharing insightful things.
I thought I just left you speechless. No?
You've done that a time or two too, Bryan.
Yeah, and always in a good way.
Thank you so much for joining us. We're going to pull you off live stream and bring on Nick.
All right. Happy holidays.
Thanks, Bryan. All right, now while we're waiting for Nick here, I would tell you a joke, but I don't have one.
I'm back.
There we go.
This is the worst I've ever done leading one of these events. And it's probably because there's hundreds of people ready to watch me embarrass myself as I flush. So with that, Nick, I'm going to bring you on and I'm going to have you give your introduction so I have a moment to recover.
So I don't have a sweater.
Ooh.
So here's an ornament for you all. I live in Florida. It's 70 degrees. Be jealous.
We are.
I am.
Okay.
Don't worry.
And I have to say, watching Bryan with the holes in him, I think Bryan Falchuk is the Swiss. I used to call him the Swiss Army knife of insurance. Now I think he's the Swiss cheese.
There it is.
Of insurance. And if he's the Swiss cheese, since I'm Italian, I'm the mozzarella of insurance. So Nick Lamparelli, my background is 25, 26, maybe 27, don't say anything, years in insurance, agent, broker, underwriter, modeler, reinsurance buyer, startup founder, and startup founder for a second time. I am co-founder of Green Shield Risk. We're essentially leveling the playing field around from property owner up to capacity. How can we get more capacity and use it more effectively, not only here in the States, but globally? We have to be able to reduce risk, and the way to reduce risk is with transparency. The way to reduce risk is to walk the property owner, level the playing field around information, allow them to have the same level of information that an underwriter would have, so they understand specifically what it's going to take to look attractive, to get insurance, and what it's going to take to actually lower the total cost of risk and thus their premiums for insurance.
Before we get to like the real heavy hitting questions, Bryan is a vegan, so he'd like to know if he can be the vegan Swiss cheese of insurance. So we just got to get that out of the way before we.
It sounds gross, but if that's what he wants to be.
We'll
Okay.
take it.
Now, Phillip, you may ask him.
All right. The heavy hitting questions here. Nick, tell us about your trend here in hardening. I know it's got a broad term and it's happening in a lot of different parts of the industry, but tell us, you take us into the hardening market.
Yeah, so I think the big trend in 2023, with all due respect to all the other trends, is the growing crisis that's occurring, especially in catastrophe-prone states. So what was a hard market going into Hurricane Ian was a hard market now being lit with kerosene. Just incredible amount of capacity is being withdrawn from the market. So what I have been seeing in the past couple of years, I think starting in a state like California with the wildfires, saw capacity being really pulled out, and you started to see situations where folks could not actually get the full amount of insurance that they desperately needed. And sometimes they couldn't get it at any cost. The insurance literally just did not exist. You saw it a little bit in Louisiana after the hurricane seasons from 2 or 3 years ago, and now with Ian, we're seeing it in Florida. So just really in the cat-prone areas is where the kerosene is being lit. The trend, though, the problem is that this is going to have pandemic-like qualities to it. It's going to be really difficult for reinsurers and capital markets that back retrocessions and things like that. They literally do not want to get behind anything that could be catastrophic. So the trend that I'm seeing is that what we're seeing in Florida, California, Louisiana, a little bit in Texas, we're going to start seeing in the Carolinas. We could potentially start seeing in New York. It's going to spill over. You'll start seeing a hardening, even in mundane and homogeneous product lines like auto. You're going to start seeing it, and so there's just a significant pullout of capacity. I think we're in a really critical time. You're starting to see legislatures step up. Florida just had landmark passing of legislation recognizing that it is indeed dire in the state of Florida, but my guess is it will be potentially fingers in a dike. I think there's some good solutions in there, but I don't see the trend slowing down. I think reinsurers are going to continue. There's going to be continual pullback of capacity. Prices are going to go up, and we will have issues around the inability to get insurance, standard insurance, and anything that has a sniff of catastrophic exposure. So that's all up and down the coast. That's the wildfire areas, Rocky Mountains West. Heard of an account in Montana that went up tenfold at this renewal season. But we're also talking Tornado Alley. There aren't many areas of the United States that would be immune to the trend that's about to happen. And I don't think it's a year trend. We may have 2-3 years. I think this is going to irreparably change insurance.
Wow. And so when you really think of it, we talk about going away from that reactionary kind of process and then we're thinking of catastrophic events and thinking about more, precautionary and mitigatory circumstances where we're really looking at things before they happen, well before they happen.
Phillip, there's no other solution, right? Like if the insurer, as a culture, we have leaned on insurance as a risk management tool, right? So you think of prevention, mitigation, and risk transfer. We as insurance professionals, we've all heard the horror stories about, I don't need to do that kind of preventative or mitigative work because I have insurance, right? That's over, right? And so property owners will step up. And part of the solution I'm trying to bring to the table is to feed them the information that they need, so they know where they can make the biggest investments, where they're going to get the biggest bang for their buck. Without that preventative and mitigative efforts, the crisis is just going to keep continuing.
So Nick, just the same along the lines of everybody else. P.S. I've just stopped muting myself and touching my computer in general so that I don't mess up anymore. But there are other couple questions and comments in there that I would love to draw your attention to as we make our transition over to Jeff here. But thank you so much for joining us, Nick. Even if you didn't have a sweater, you added your festivity with your ornament and Saint Nick as your title.
And my trend was so cheery.
It was. You brought
Happy
so
New
much
Year.
joy to all.
Happy New Year.
Thank you, Nick. All right. So, Jeff, we've got you coming in. So can you give everybody an introduction? And also, again, same acknowledgement that came from Lisa. You're blinking too. You're shiny and you're blinking. You were part of the reason that we were able to get this event going. So thank you for the inspiration. And can you give everybody a real quick introduction?
Yes, thank you for having me. What a great panel to be on, speaking to 900 plus people, right? And so I am the founder of Insuretech Groups. We are a startup Insuretech company focused on the CX experience of consumer in the personal line, trying to change the way the next 3 decades of insurance being sold. We are start going away from the one brand, one product, one price model to now a Costco model for the everyday insurance people, right? So we're trying to bring that on an omni-channel, on a scalable level through our call center and in the digital model to integrate with our daily client experience. While there's 99 people in the room screaming tech, we want to also scream client experience.
Outstanding. And so you've got a pretty interesting trend here that I think is going to catch a lot of people by storm, because we've heard this word a lot this year. I said, but we're talking about the non-SPAC world. But before you jump into that, can you kind of just give us a quick 30 seconds on for those who don't know what a SPAC is?
Yeah, so venture capitalists, their jobs are, make big bets and great bets, right? Like their bets are not to succeed on 40, 50% time, but 10%, 5%, 2% of the time, where, you give them your money and, their jobs is to go out there and make the biggest bet possible, like Uber, like Facebook, like Coinbase, etc. And the world has changed a little bit where there's less SPACs, right? SPACs is a special purpose acquisition company where made famous by Chamath, right? The guy who was part of Facebook. And basically you can become a company like Roots, Metromile, Hippo, Lemonade of the world, and join with the already existing SPAC and then go public that way. So this way that you kind of hide your underwriting combined losses, but you can go public through IPO SPAC. And this way that it's a faster process to go IPO. We're talking about instead of 7, 8, 10 years, we're talking about 2 years, 3 years. This has been red hot the last 5 years. And we saw $6.2, $6.8 billion coming to the market from the Insuretech space. And I think as SPAC is going away or sitting on the sideline, the fundamental of Insuretech companies are changing. And that is huge as we watch how the second half of 2022 played out, where we saw a lot of layoff through tech companies. And a lot of these Insuretech companies value themselves as tech companies. And what does it mean for a trend for 2023 is now it's no longer velocity of revenue, velocity of growth. Now it's about the basics, combined rate, right? It's not just about, we always made fun of Insuretech company because of their loss ratio, right? But they didn't care because they're chasing the velocity of growth to impress that IPO status, right? But now they're getting back down to the basics of how to run an insurance company. And that is now scarier than before for the legacy company, right? People like legacy company like State Farm, Travelers, they did not fear the Insuretech competition because they know that this is a basic fundamental game and you have to run a fundamental combined rate to be profitable, to be competitive for the long run. But now that you start seeing like really, really good innovative company like Branch, ClearCover, Openly, with their innovations, with their technology, they're now starting to run the fundamentals in more detail. So instead of trying to figure out how do I go IPO in 3 to 4 years, but how do I make my money last and be a successful company 5, 10, 20 years? And I think now Insuretech companies really become scary to the legacy companies. And also we're seeing a massive rate increases coming up. I think the post-inflation supply chain era, we will see double the premiums, our auto premium, commercial line auto premiums, and also homeowners property premiums. What does that mean? Many Insuretech companies been using a pitch that's saying we're disrupting a $940 billion space. That's going to be a $1.3, $1.4 trillion space in the next 12 to 18 months. So you're going to see, I'm contradicting somebody from earlier. I think instead of just VC money, we are now going to see serious PE money, right? Because PE money is now bigger check size. PE money is now longer asset under management, and they want more of the pie. So instead of the $5 to $20 checks, we start seeing a couple $100 million of checks coming up, like what we saw with Pi, like what we saw with Branch. And also one thing is going to be following what Nick said. Nick hit it out of the park on that last observation of tough environment states: Florida, Louisiana, South Carolina, Mississippi, California, Colorado, Texas, New York, right? And I think every tough environment is going to lead to innovation, because it has to, right? So we saw Florida pass a massive legislature, and I think what's going to happen is you are going to start seeing state pensions, state-funded pensions, backing a market that's blowing up. That's the reinsurance place is blowing up, right? It's falling apart. So now we're going to see state pensions, which is billions and billions, start playing with dedicated reinsurance players on focus on bringing money and reinsurance back into the state pensions, and also to back these state-sized insurance carriers. So, for example, if someone like Branch, someone like openly want to play in Florida, Louisiana, Mississippi, why can't we have a future hybrid model of these carriers working with the state pensions to back the reinsurance? So now we have a hybrid version of Citizen operated by private market, backed by the market of state pensions, and really grow to sponsor the need of these states. So my last big prediction, the most important role in 2023 is Chief People Officer. That's going to be a key role to watch in Insuretech and legacy players, because they're fighting to recruit the best talent. Talent going to be harder. They're fighting to mold the future of the talent. And also they're fighting to handle how does remote work look like in 2023, when there are people out there doing 2 to 3 jobs while they're obtaining one, work hour. So that's my prediction.
Well, thank you so much for joining us, Jeff. I'm going to pull you off, and we are past our time. So I feel pretty impressed that we made it through everything that we made it through, despite all of my technical difficulties. But thank you again, Jeff, for joining us. And as I said at the very beginning, I will be spending some time raking through the comments. There's a lot of them. Everyone was really active, which makes these live events so much more fun to know that everybody is there watching. And I will be announcing on Friday, with a special TikTok Friday, who wins the tickets for the show. So keep an eye out for that post. And I will also put the Leading Change YouTube link into the chat here. If you're not already, please come over and subscribe to the channel there. And let me know if any of these topics are things you want to dive further into in future interviews, so that I can bring forward the type of content that everybody wants to watch. But Phillip, thank you so much for not only co-hosting, but tap dancing when I somehow got myself out of the live stream.
Hey, we do what we have to do to support each other, Emma. I've got you covered.
A number one hype man right there, everybody. Get yourself a Phillip if you don't have one. But happy holidays, everybody. And thank you so much for sticking with us throughout the whole rapid fire session. And we look forward to talking more with everybody in the new year.
Enjoy.